Good morning.
Morning. So we start the day 2 of the National Tax Conference. I think you are able to hear the voice.
Yes, sir. Yes, sir.
Good morning, sir. I can hear you.
Good morning, sir. Namaskar. कैसे हैं sir?
I'm good, sir. Thank you. And बहुत बधाई हो. बहुत बढ़िया कार्यक्रम शुरू हुआ.
No, sir. It's all the blessings of you seniors and all the blessings of everybody. And it is a fortunate event that for the All India Federation of Tax Practitioners and all the tax fraternity, it is a privilege that Honorable Finance Minister has came. And apart from it, she applauded the role of the tax professionals in the building of the nation and collection of taxes and the role of the tax administration and the role of the taxpayers.
Yes,
and
it was
good words.
Yes, it was encouraging to see the good words said by the Honorable FM, and it all goes to the leadership of All India Federation of Tax Practitioners. So, heartiest congratulations to all of you.
Thank you, sir. Thank you. So, friends, we are about to start the day 2 of the National Tax Conference 2020 by the AIFTP Central Zone. It was a historic day 1 of the National Tax Conference, which was inaugurated by none other than the Honorable Finance Minister of India, Srimati Nirmala Sitharamanji. She addressed for almost 45-50 minutes, and she talked about the various schemes being launched by the central government for easing of the procedural aspects in the direct and indirect taxes, and also simplification in the direct and indirect taxes. She also talked about the faceless assessments and appeals and the faceless interaction with the department. She said that the motto of the department under the leadership of the Honorable Shri Narendra Modi, the Honorable Prime Minister of India, is that there should be simplification in paying of taxes with widening of the tax base, and there should not be collected not a penny less or not a penny more. That should be the motto of the tax collectors as well as the taxpayers. She applauded the role of the tax professionals, be it an advocate, chartered accountant, tax practitioner, because he is the way between the taxpayer and the tax administration. And she applauded the educational activities being conducted by AIFTP and the various webinars being conducted. Friends, it is an historic moment because as far as I remember, this is the first time that our Honorable Finance Minister has come on the platform of any tax association, and this is something which we will always cherish. To start the day, I would request our National Vice President, Shri Rajesh Mehta, to give a view of the today's technical session. Our one of the star speaker, respected Shri Manoj Fadnis is already here. So I would request Shri Rajesh Mehta to give a glimpse of today's technical session and give his opening remarks. Shri Rajesh Mehta, your voice. Sir. नहीं आपको पैनलिस्ट कर दिया मैंने. Rajesh bhai, you have to log in from other place. Rajesh bhai, please log in from another system. So in the meanwhile, Shri H.L. Madan sahab has also joined. I would be now requesting Shri Sandeep Agarwal, the secretary, to say a few words. Sandeep, you have to unmute yourself.
Yes, sir. Good morning, all of you. I welcome you all on day 2 of National Tax Conference 2020 by All India Federation of Tax Practitioners. Our today's panelists are most reputed person DK and Gandhi advocates, sir. Manoj Fernandez, CSR, past president ICAI. Shri H.L. Madan CA sir, and CA Anul Mathur sir. Today we will discuss on the topic of in first session panel discussion on important aspect of survey search under GST and Income Tax Act. Today's first session chairman is Mr. M. Srinivas Rao, Deputy President of our AIFTP CZ. I welcome you all. I am sure you will getting more today as day one. If Pankaj permits me, I will say as
very well. Yes, Sandeep, yes.
Today's second session is about the important aspect of TDS and TCS. There, the speaker will be Shri Mahendra Gargia ji, advocate from Jaipur, reputed advocate. Our own Vice President Central Zone, Rajesh Mehta ji, CSA will be the speaker. Session Chairman, our National Past President, Mrs. Premlata Bansal ji. That session will be all covered important aspect of TDS TCS. This session chairman, M. Srinivas Rao, sir.
Srinivas ji, please keep quiet.
I'm sure you will be all enjoyed and learned so much as you're gaining yesterday. I hand over the mic to Pankaj ji.
Thank you, Sandeep. Now, I would request Mr. Vinay Jolly, the Chairman Central Zone, to speak few words. Mr. Vinay Jolly.
Thank you, Pankaj ji. Shri M. Srinivas Rao, Chairman of the session and Deputy President of AIFTP. Panelist Shri D.K. Gandhi ji, Manoj Fadnis ji, Madan sir, office bearers of AIFTP Jones, Vice President AIFTP Mr. Rajesh Mehta, Chief Advisor Shri Pankaj Ghia, Executive Members of Central Zone, Senior Members and my professional colleagues. Very good morning. Respected members, esteemed dignitaries, at the outset I welcome you all to today's technical sessions of National Tax Conference 2020 organized by Central Zone. We have been overwhelmed by the response in the terms of registration we have got from you all. It has always been the purpose behind such webinars and conferences to provide our members with an opportunity to listen to the learned and experienced faculty on very pertinent topics. A professional plays a vital role in the overall development and upliftment of the national economy and society. That is the reason why he must be well updated and well versed so that the desired objectives can be achieved in an efficient and effective manner. That is the main reason behind organizing this webinar, that our members can be well versed with the burning topics in the direct taxes as well as indirect taxes, so that they can effectively discharge their professional duties towards the society. I personally and on behalf of the AIFTP Central Zone wish to thank from the bottom of my heart all the chairmen of the National Tax Conference 2020 and panelists, speakers from various parts of the country for accepting our humble invitation to share their valuable knowledge and expertise on the burning topics with our members. I'm also thankful to all the delegates for participating in large numbers in all the activities of the zone. Besides, I am sure that the delegates will be benefited by this webinar. Let me also thank all the executive committee members for extending their full-hearted cooperation for the organization of this mega webinar. I shall remain always grateful to the senior members for showing their valuable guidance and support. With this, I again welcome you all. Jai Hind. Over to Pankaj ji.
Thank you, Vinay. As usual, the vibrant chairman of the Central Zone giving his vibrant speech, and it is the time now. We still have 4 minutes to 10 o'clock. So I would be asking Rajesh Mehta, the National Vice President, to give a brief intro about the NTC.
Welcome to all participants in second day's National Tax Conference. First of all, I am thankful that on the day one inauguration of our National Tax Conference was done by our Honorable Finance Minister, Srimati Nirmala Sitharaman. That program was attended by more than 20,000 participants on Facebook Live, YouTube, and Twitter, and viewed by many thousand persons across the India on various TV channels. Many of the regional and national TV channels telecasted our program across the India, and we got a good coverage everywhere. So I am thankful to all of you for making the day one a grand success. And today we are having our session chairman, respected Malladi Srinivas Raoji, Deputy President AIFTP, under whose able leadership we are also going to organize one national tax convention on 5th and 6th December. AIFTP, that will be virtual national tax conference and national tax convention. And I welcome today's speaker, respected Manoj Fadnis Sahab, past President, Institute of Chartered Accountants of India. He will be delivering his views on survey and search under income tax. He will be handling some queries we have received, and we are having respected HL Madan Sahab, DK Gandhi Sahab. They will deliver their views on search provision under GST. So I welcome to all, and I am thankful to my team, our team, respected Pankaj Ghaziabad, Vinay Joliji, Sandeep ji, who had made the convention and national tax conference a grand success. I hand over the mic to Sri Pankaj Ghaziabad.
Thank you. Friends, it's the time that we start the first technical session on day 2 of the National Tax Conference 2020. Friends, the great success is all because of you all participants, because you are the God for the speakers. If you are not there, we cannot talk, we cannot deliver our speech, or we cannot share the knowledge. And your queries, your inputs makes us more educational, makes us more educative, makes us to work hard so that we can be giving right answers to your queries. And this is the right time today, in the morning, Saturday morning, just before Deepavali festival, a weekend before Deepavali, we are sharing the knowledge. We have the chairman, Mr. M. Srinivas Rao, the deputy president, the star speakers of today, Shri Manoj Fadnis, Shri H.L. Madan Sahab, and Shri D.K. Gandhi Sahab. So the star panel, apart from our own national vice president, the great knowledgeable person, Mr. Rajesh Mehta. So this star speaker panel will be deliberating on the aspects of GST and income tax on search, survey, and seizure. And specific questions that are being received would be answered by each panelist. The panel would be open if they want to supplement other panelists also. If they want to add something to the answers by the other panelists, the panel would be open for that. With these words, it's 9:59 a.m. and directly I am giving the charge to Mr. M. Srinivas Rao, the chairman of this technical session, for his opening remarks. And then I think we will be having the questions and answers by the panelists as per the discussions with Mr. Rajesh Mehta, who will be seeing the panelist working also. With these words, I hand over the mic to Mr. M. Srinivas Rao.
Thank you very much, my dear Pankaj Bhai. First of all, I thank the organizers of Central Zone, which is the vibrant zone of all over India. First of all, they have conducted excellent virtual webinars as well as the National Tax Conference also. This National Tax Conference is the third National Tax Conference in this pandemic COVID-19. And first of all, I thank the organizers. Then I move to my past presidents who are there at Central Zone, Sri M.L. Patwadi sir, Sri Ganesh Purohit sir, and other past presidents in other zones. First of all, I take this opportunity to take the pranams to our seniors of Guru's past presidents. Then I move to the zone, the Central Zone, the vibrant chairman Sri Vinay Joliji, and the zonal secretary Sri Sandeep Agarwal, and none other than Sri Pankaj Ghaziabad, who is behind the curtain all the affairs in his leadership going on in Central Zone in excellent manner. And the vice president, the national vice president of the zone, Sri Rajesh Mehta ji, and the joint secretary Sri Hemant Modi ji, and other members of the zone, I congratulate one and all. Yesterday, we witnessed over there from all over the country eagerly waited for the speech of Madam Srimati Nirmala Sitharaman. The speech is very important to the any chartered accountant or advocate or practitioner. Uh, this is the introduction. Then we move to the subject. Today is the subject of search and seizure under the income tax and GST. First of all, we move to the income tax. The income tax, the search and seizure was defined very clear, but the right which was been already used by the people who are there in the outside of the department and the SSCs are the clients, the right is not defined in the Income Tax Act. Secondly, the search and seizure was defined in the GST is not very much clear, but however the Income Tax Act is prevails in the GST Act because it is only 3 years baby that was not defined. But actually the Income Tax Act section 132 or 132 1A are also defined as GST also. In GST, there is a lot of difference between the GST search and seizure and the income tax search and seizure. In income tax, the search and seizure was very much clear from the so many years to going on, for which the search and seizure is not mentioned over here. But the GST search and seizure is something complicated. The both are always complicated, but practically the search and seizure in GST is complicated nowadays because this is the new act, new era. We are already practicing more than last 3 years. Uh, uh, Today we have the excellent and eminent. I don't want to go through it. Today we have excellent panelists and learned panelist, Mr. Manoj Fadnis, past president ICAI, Mr. D.K. Gandhi from Ghaziabad, advocate from Ghaziabad, and our Sri H.L. Madan, who is a indirect tax chairman of our AIFTP from Delhi, and Sri Anil Madhur, chartered accountant from Jaipur. These are the 4 panelists who are answering these queries which are already received by the organizers and as well as which have been in chat box also. They would like to answer and I would like to reserve my reservations after completing the session to 1 or 2 minutes maximum. Please go ahead with this team of panelists. Today's panel discussion about the search and seizure, income tax as well as the GST. Thank you very much. So kind of you giving me this opportunity, and I will welcome the all panelists 1, 2, 3, 4. Each panelist given minimum first 2 questions, then move to other panelist, and then we move to the another person 2 questions like this. This is the better way to answer all the questions. First of all, I would like to welcome senior.
Mr. Srinivas Rao, let me take it over. And at this juncture, I would request our Shri Manoj Fadnis to answer the question allotted to him. Friends, I may add that in spite of some personal, very emergency difficulties, Shri Manoj Fadnis has agreed to be on this panel, spare his valuable time, and we are deeply grateful to him that in spite of some very personal emergency situation, he is there on this panel today. Thank you, sir, and I would request you to please take your queries.
Thank you very much, Ghaziabad. Distinguished all the office bearers of All India Federation of Tax Practitioners, starting with Sri Pankaj Ghiaji, my very esteemed friend, CA Rajesh Mehta ji, Sandeep Agrawal ji, Vinay Jolly Sahab, chairman of this session, Mr. Srinivas Rao, very eminent advocate Sri D.K. Gandhi ji, my very old friend from Jaipur, Sri Anil Mathur ji, Sri H.L. Madan Sahab, and all the seniors who are part of this conference. Our very senior member, Sri M.L. Patodia ji, Sri Ganesh Purohit ji, and I also find that our very esteemed senior member and senior advocate from Indore, Sri P.M. Chaudhary ji, and all other friends who have joined this program. It is my great fortune to be part of this program, and I compliment the All India Federation Tax Practitioners for organizing this, for getting the Honorable Finance Minister to inaugurate this conference. The Finance Minister addressing the tax practitioners and what words she said is a matter of pride for all of us. And my compliments to the leadership of All India Federation of Tax Practitioners, and particularly my dear friend Rajesh Mehta ji, for all the good work which the Federation is doing. Well, I been allotted some questions and it would have been my privilege to sit through the whole session, but as explained, due to certain personal exigencies, I would be withdrawing after dealing with the questions which have been already allotted to me. So the first issue is a very common issue which all of us face is what is the evidentiary value of statements recorded in the course of income tax surveys. So this has been a practical difficulty for many of the SSEs, that at least in the past it was very common that
Right.
whenever a survey takes place, it results in a statement being recorded, and during the course of recording the statement, certain surrenders are made. Therefore, the question arises as to what is the evidentiary value of that surrender. Now, friends, fortunately, this issue is well settled and well decided by decisions of not only the Honorable Supreme Court, which has laid down the broad principles, but in a way, several decisions of the Honorable High Courts and tribunals which have interpreted this decision and brought the law to its present state of clarity. So unless there is a statement which is recorded during the survey and which is corroborated by some other evidence, the mere recording of a statement will not hold evidentiary value, the manner in which it is in the course of a search. So in case of a survey, uh, it is a statement which is recorded. If it is corroborated by other evidences which are recorded by the survey team, then that statement certainly has a evidentiary value. But a bald statement, a statement where the SSE has surrendered certain income, and if this SSE can later on demonstrate that it was under mistaken impression, under an impression that is if his books of accounts were not complete, for instance, and he has mentioned that my books of accounts are not complete, and at that point of time the survey teams says that you surrender, say, 1 crore rupees by way of a stock difference, and he surrenders that. Later on, if he can demonstrate that the stock as per his books of accounts and the stock which was physically verified by the department is in agreement, and he has been able to demonstrate that with the proper evidences by way of purchase invoices, sales invoices, and other documentary proof. Because during the course of the year, many a times it happens, and of course in the GST period there is an invoice which comes in along with the goods, and there's an invoice which has to necessarily go along when the goods are sold. But the sales may not have been recorded in the books of accounts. The purchases may not have been recorded in the books of accounts. Most of the enterprises, but particularly the small traders, the smaller manufacturing companies, may not have very detailed computerized stock records. And therefore, there is a time lag between the point of time when the goods have arrived and the point of time when the goods are recorded in the books of accounts. So if these differences can be reconciled, and basis that reconciliation, if at a later point of time, if the SSE so desires to challenge his statement, then the basis the several decided case laws, the SSE uh, can easily contest whatever surrender he has made in terms of during the course of the survey. So that is supported by various case laws. I did not go through the list of case laws, but as a tax practitioner, as a chartered accountant, as an advocate, it is advisable that if the SSE wants to uh, resign his statement, if he wants to withdraw his statement, the same should be done at the earliest point of time. At the earliest point of time, it should be done as soon as possible. And if there is a long delay, then it could be for the SSE to demonstrate why he has taken so much of time. Because he says, I say on oath, and I am in full consciousness, I have said that. So after some certain period of time, if he wants to withdraw his statement, longer the period, more practical difficulties would be there, and the assessee would have a difficulty in supporting his withdrawal of that statement. So this was one part which I wanted to deal with. Second very important aspect is the second question which is raised here, and again a very practical issue which is raised there is with respect to the dumb documents. Dumb documents are documents which, if found during the course of survey or more particularly in the course of search, that there are documents which are found which are, say, not signed, they are incomplete statements, incomplete pages, but they give some indication. They give indication of certain receipt of money or certain transactions which would have taken place, and therefore they are indicative of what could possibly have happened. Based on such documents, very obviously the income tax department is likely to make additions, the assessing officer is likely to make additions on the basis of these dumb documents. Again, to prove that a document is dumb, it should be unsigned, it should be incomplete, and the assessee should be in a position to say that this document does not is not related to him. So the facts are very important. The law is clear that on the basis of, if somebody has made a entry in his books of accounts or in a diary that so much money is received or so much money is paid, that by itself will not become a basis for addition in the hands of another person. But again, the facts would become important, and the such other person will have to demonstrate that this document does not relate to me, this transaction which is said does not relate to me, and then one can get away from the rigors of those additions made by the assessing officer. It could be in the case of the person who is searched, and invariably it is in case of any other person. So assuming there is a builder and he has sold several flats. Now in his diary it is found that certain people have paid him certain amount of money. Basis that document, the transaction goes to the person who has purchased, and he is asked to prove how this money was paid by him and what was the source of his money and how this investment, why this should not be considered as part of undisclosed investment. So the difficulty could be with respect to the person who is searched, as well as with respect to other person who may be involved in relation to that dumb document. So the law is clear, the law is well settled, but on the basis of what evidence is recorded, how the transactions are recorded, how the transactions can be refuted by the assessee is important. And if we can demonstrate that the person searched or the other person are no way related to that dumb document, then in my opinion, it is possible to get out of the additions made on the basis of such a dumb document. And again, we have several case laws which would support a valid view which the assessee may take in these cases. Arising from this, there has been a very important decision of the Honorable Supreme Court this year with respect to the proceedings in case of a search and in relation to another person. So this is in the case of Super Malls Private Limited versus Principal CIT New Delhi, wherein on the facts of the case, a person was searched. He was a director in this company, and a document was found in his books which said that certain money which his company had received, there was certain transactions which were recorded in that diary found in the possession of the director, but which were not recorded in the books of that company. Now, the assessing officer for the company and the director was one and the same. He recorded his satisfaction with respect to the person searched, that is the director. He did not record a separate satisfaction in the file of the company, which is the other person in this case. Now, that company as an assessee challenged the addition made in its hands on the basis of what document was found in the possession of the director. And a very legal plea was taken that no satisfaction has been recorded in the case of the company by the assessing officer. The department's plea was the same assessing officer is there. He has recorded his satisfaction in respect of the searched person, that is the director, but has not recorded a satisfaction in respect of the other person, which is the company. And this director is the director in that company. He is the one who is taking the transactions of that company, and the assessing officer is the one and the same person. So it is a matter of only administrative procedures, and this cannot be a ground to negate the entire findings of the assessments. So this matter traveled to the first appellate stage, where CIT appeals dismissed the appeal of the assessee. The matter went to Delhi Tribunal, Honorable Delhi Tribunal in this case, held in favor of the assessee. And the Honorable Tribunal, based on certain decisions, said that the assessing officer should have specifically recorded a finding even in the case of the company, though he is the one and the same person. Now the matter travels to the Honorable Delhi High Court, which ruled in favor of the revenue, holding that though it should have been recorded, but it is only for administrative purposes. And since it is the same assessing officer, then there is no requirement for a specific finding in the case of the other person, that is the company, who is the appellant in this case. Thereafter, the assessee took the matter to the Honorable Supreme Court. And the Honorable Supreme Court in this case, which is a pronouncement in the year 2020, Super Malls Private Limited versus Principal CIT New Delhi, the Honorable Supreme Court has upheld the decision of the Honorable Delhi High Court and said that if there is one and the same assessing officer, and if he has recorded his satisfaction in context of the searched person and not recorded in the file of the other person, then it is only an administrative matter. It cannot go to the root of deciding that the entire additions have to be negated. But the Honorable Supreme Court has also said that if he was not the same person, if the assessing officer is not the assessing officer for the other person, then this assessing officer of the searched person has to record his satisfaction. It has to go to the concerned assessing officer of the other person, and that other assessing officer also has to record his satisfaction that is satisfied about those documents which are found, and then it can become a basis for taking action against such other person. So though this decision is against the assessee, but it clarifies a very important legal position and a practical position which many of us would have experienced in such cases. So thank you very much, Ghaziabad, for this very kind opportunity. Thank you, Rajesh Mehta. And with the permission of the Honorable Chairman of our session, Mr. Srinivas Rao, I would seek to be excused and withdraw from these proceedings. Thank you very much.
Thank you. Thanks a lot, sir. Thanks a lot. Thank you, respected sir. And now I invite Sri H.L. Madan Sahab to deliver his views on GST.
Good morning, sir. My voice is reaching?
Yes, sir. Audible, sir. Srinivas Rao sir, aapka mic, your mic is off, Srinivas Rao sir. Now it's audible.
Audible, sir. Audible.
Now audible, yes.
So, respected seniors in the profession and in the participants, respected chairman of the session, Srinivas Rao sir, respected chairman of the zone, respected national vice president of the zone, D.K. Gandhi Sahab, other panelists, and my dear professional brothers and sisters. Good morning to all of you. And I'm extremely grateful to the Central Zone and especially Mr. Pankaj Ghia to give me this opportunity to be present in this panel discussion on search and seizures relating to income tax and GST. As Manoj sir has rightly said, that in income tax, we have a long journey so far as search and seizures are concerned. In VAT also we have surveys and searches, But now in GST, since it is only 3 years old, therefore there is not much, but now it is picking up. Because of the fake invoices, many searches are there, many arrests are also there. So far as arrest part is concerned, respected DK Gandhi sir, our other panelists will be taking over. And so far as simple matters are concerned, that will be definitely taken by me. So friends, the first question is, to my mind, that what for searches and inspections are required in the Act. That is the basic thing. Why it is required? So as you are aware that now government is saying that GST is a good and simple tax. Government wants to make the things very simple. And in order to make it simple, the government wants that every tax is to be paid on self-assessment basis, and they believe on the taxpayers and they have full faith in the taxpayers. But as you know that everywhere, in every society, there are certain people who are dishonest also. And because of these dishonest people, there is a challenge before the honest people also. As well as there is evasion of tax so far as government is concerned. So in order to curb this evasion of tax, we have the provisions relating to inspection and searches. Now the question is that in order to take the decision, who is the person who can authorize the inspection or search? In GST, the provision is that the Joint Commissioner or above authority can only take this decision. They can authorize the inspection. Now, in order to authorize the inspection, there is a form called INS 1, Inspection 1, that is to be filled up by the Joint Commissioner, and there are 4 columns over there on which it is written what for he is trying to carry out the inspection. What is the reason for that? He has to take that reason and then he has to sign at the bottom that he is authorizing such and such person. So name and designation of that person should have also to be mentioned. And look at the bottom of that INS 1. Please note, on the bottom of INS 1, there is a column where it is written name, designation, and of the signature of the person who has been authorized to conduct the inspection. At the bottom of the form, there is a column which says name, designation, and signature of the inspection officers. But in this prescribed format, which has been prescribed by CGST Act, in this form, at the bottom, name, address, and signature of the officer is also required to be made. Signature of the officer who is going for inspection. But in states, it has been found. In states, it has been found that this signature columns have been deleted. Signatures are not mentioned. Only name and designation and name is given, and signature is left over there. So issue is, the point involved is whether such a authorization on which there are no signatures of designation and signature, there are no signatures of the person concerned, can it be said to be a valid authorization? Of course, there are 2 types of the decisions in which it has been said any notice, summons, or assessment order. If it is technically some mistake is there, then government say that it will be a valid document. There is a section also in GST. It was there in income tax also. It was there in VAT also. In Delhi VAT, we had DVAT 80 and section 80, as well as in income tax, there is section 292 BB also. That if there are certain technical defects in the forms and orders, it is not necessary. It will be a valid order or notice. But here the question is whether it is a substantial mistake or it is a technical mistake. Whether this type of authorization can work or not. So now, in time, the experts have gone into writ petition on this account also. Let us see how the courts decide. But this is an important matter for the members to know that this type of mistakes are coming from the state side while authorizing. They can make use of it. They can go through all the sections relating to 292(b) in which it has been held. In spite of the fact there are certain errors, the court said, no, this is not a technical error. This is a substantial error. And therefore, the orders have been, notices or orders have been quashed. So members can make use of that. This is one. And the second is a very simple question. Place of business. In inspection, for carrying out the inspection, it is to be mentioned that the place of business has to be inspected. Which place of business? Any place of business. Any place of business have been defined in section 285. So members normally ask whether residence of the businessman can be inspected or searched. In GST also. In income tax, we know that the officer has the power to, in raid, he can go to the premises, residential premises also, and he can carry out inspection and search there also. So as GST is concerned, normally we understand that it is related to business activity. And in relation to business activity, wherever we have a godown, where from we are buying the goods, where from we are selling the goods or services, or we are storing the goods, godowns, etc. Those are the places which can be inspected. As a general practitioner, I will understand it like this. But section provides place of business means all these what we have discussed, along with where the accounts and records are maintained and kept. So now if accounts and records are maintained and kept at the residence of the proprietor or of the partner or of the director, in that situation, the premises can also be inspected, which may be even a residential premises or the business premises. So this talks of the INS 1 and place of business where inspection can be carried out. So I hand over the mic to Pankaj so that the next question can be put to the another panelist.
Okay, Gandhi sir.
Sir, you have to unmute your mic. Gandhi sir, you have to.
Yes. Very good morning to all. It is I'm very fortunate that I have been given opportunity by Central Zone. Shri Rajesh Mehta ji, National Vice President, Shri Pankaj Ghia ji, who is the mentor of the Central Zone, Shri Vinay ji, Shri Sandeep Agrawal ji, Chairman of the session, Mr. Rao, my brother HL Madan, and all the participants. I welcome all of you to this lovely morning. So we have gathered here to a very quick discussion on survey and seizure under GST as well as to income tax. I will not be going into the details or the language of the section of the search seizure. I hope all are well aware. What I would like to point out, there are one or two very important aspects which as a tax practitioner we must keep in mind. The number one is a very important one circular, that is circular number 1, which we have to keep in mind, that talks about overlapping jurisdiction. It's a specific circular which says that once a jurisdiction of a central officer is there, a state officer should not overstep into that area. Although this circular talks about the jurisdiction and it has been already taken care of by the Supreme Court of India in the India Household and Healthcare Limited, that jurisdiction part, once an officer takes a assumed jurisdiction, other officer loses its power to assume the jurisdiction. So it is very clear, but what is happening normally in the survey proceedings, seizure proceedings, authorities are now overlapping and we are going to the courts of law. And second very important thing is with how the authority has to work. This is very important part. Even in recent 3 years, we have found how the authorities are functioning. Arrests are being made, surveys are being done, seizure is being done. We all very well know they are well empowered, but how they are doing it. This is very important case law. This is a case of Maheshchan versus Diesel Manager, UP Financial Corporation, 1993 to SCC, page 299. I would like to read it, very important. What they say, that officer should be duty conscious rather than power charged. What they say, Supreme Court categorically observed that wherever wide power is conferred by statutes on public functionaries, the same is subject to inherent limitation, that it must be exercised in just, fair and reasonable manner, bona fide and in good faith. Otherwise, it would be arbitrary. In such cases, test of reasonableness is stricter. Very important aspect of what the Supreme Court has said. The Supreme Court further held that the public functionary should be duty conscious rather than power charged. In para 15, what they say, an action is nullified if it is contrary to the purpose for which it was authorized to be exercised. Dishonesty in discharge of duty vitiate the action without anything more. An action is bad even without proving motive of dishonesty if the authority is found to have acted contrary to reason. What they say, the reason must be there. So when we are dealing with the survey proceeding, search proceeding, we have to take care of our client as well. It is our utmost duty as tax practitioner to look into how the authorities are functioning, whether they are discharging their duties in a dutiful manner or are they abusing power. In this context, one very important part is under GST, power to arrest has been utilized very swiftly. And the moot question is whether a lawyer, whether a counsel is entitled to assist his client at the time of survey or search. The normal question to every practitioner knows, no, authority won't allow. But I would like to point out some very important cases which says that even in the case of National Security Act, I would like to quote that particular case also, that says that it has to be granted an opportunity to accused. So in that a senior matter, in NSA case, in the case of C.L. Subramaniam versus Collector of Custom 1972 SC, some professional assurance must be given to the party to make his right to defend himself meaningful. So we have to understand that all the so many cases of Supreme Court lays down a procedure that a lawyer can assist his client. And lawyers should come forward nowadays. They should come and state the claim that we are the custodian of our client. We are going to help our client. It is our duty as a social duty also, because when they are taking law into hands, it is our duty. We are saying, because this is a civil action, whatever they are going to do, even if it is a evasion of tax, and until it is proved, you cannot say that it is you are not going to take assistance of any lawyer or consultant or his chartered accountant. So my clear view is that Supreme Court goes in our favor, it goes in the favor of client, and we should come forward. And not going into much, I am closing my remarks and handing over the mic to Mr. Rajesh Mehta. Thank you, sir.
Rajesh Mehta ji.
Rajesh bhai, just to interrupt in between.
Welcome.
Friends, I am very happy to inform that today also we are crossing almost 450 participants on YouTube, Zoom and Facebook Live. So we are right now available on YouTube, we are available on Zoom, we are available on Facebook, and we are also live telecasting on Twitter, on Periscope TV. So almost 450, 500 participants are watching us, and we thank all the participants for their, we are highly grateful to them for their benevolence. I welcome Mrs. Premlata Bansal, also our past national president, who is the chairman of the next session in this webinar, second day of the National Tax Conference 2020. Over to Rajesh ji again.
Anil Mathur. Sir, C. Anil
Mr.
Mathur.
Anil Mathur is not here because his son is admitted in the hospital and is in difficult situation because of COVID. So I think Mr. Rajesh Mehta may be taking
Rajesh bhai.
his queries.
Rajesh Mehta, sir, please.
Yes, sir. So, first of all, I am thankful to all. And as regards income tax survey and search, Manoj Fadnis Saab has dealt with his queries in an excellent manner. And now I am discussing as such survey and search provisions. Most of the chartered accountants and advocates have to face various problems when our clients admits some amounts during survey and search which are not his concealed income, even though they admit on the basis of dump documents during the course of survey and search. So that causes problems at the assessment stages. So we should in advance train our clients that if you face any survey or search, what course of action you would take if any of the document has been found in your premises in the course of survey or search. First of all, no, he must be aware of the evidentiary value of that document. When we come across the time of assessment, at the time of appeal, tribunal, high court stages, we find that most of the documents are dumped, even though many times in the case of search, even though many documents are signed by both the parties, but some corroborative evidence are also required. Say, for example, a search has been carried out at the residential premises of a real estate developer. There, a document has been found of rupees 1 crore. That was signed by both the purchaser and buyer. But the seller, the search has taken place at the residence of the seller, and in that document it is signed and it is written that I have received rupees 1 crore in cash. But if the search team has not found rupees 1 crore cash at the premises of the seller, then that document will certainly be a dump document, because where that 1 crore rupees is lying, physical cash, if physical cash is not seized, then at the assessment stage, at the appellate stage, that document will be treated as a dump document, because there is no other corroborative supporting evidence. So we should advise our clients that they should not admit any such surrender, any such admission which is not backed by any evidence. He should say to the income tax department that kindly you may seize, you may impound that document. I will reply you at the assessment stage, because I am unable. Otherwise, in the course of survey and search, many assessee declare rupees 100 crore, and when the assessment happens, when the ITAT or High Court decisions comes, those 100 crore reduced to rupees 1 crore, because there was no corroborative evidence, there was no cash physically seized by the survey or search teams. So many times income tax department seizes the diaries in which thousands and millions of rupees transactions are there. So if any unaccounted sale transaction is there, then some unaccounted sale invoices must also be impounded by the department. Unaccounted purchases must also be impounded. Unaccounted purchase invoices must also be there. If unaccounted stock is not there, unaccounted purchase invoices are physical invoices are not there, then such diary will be treated as a dump document at the assessment or at the appellate stage. So this is my views on survey and search issues in a brief manner. So now I hand over the mic to Srinivas Rao Saab to give his concluding remarks.
Thank you, sir. Actually, Sri Pankaj Gia is already told about this. Today is auspicious day of Saturday, but not only a Saturday and second day National Tax Conference of the Central Zone. Today is the Jayanti of Sri Sir C.V. Raman, who has got the Nobel Prize from the international, and as well as he has got the Bharat Ratna from India. Because this auspicious day deals with the eminent scientist who has investigated in light and water, Mr. C.V. Raman. And also one more, today is also the National Cancer Awareness Day. These are the two important events of today, and the Central Zone is also conducting the National Tax Conference on virtual mode. And first of all, I thank Sri Manoj Fadnis sir for giving his valuable panel queries of Subsequently, we move to the HR Madan sir. His view about the GST. There is a one thing I would like to add. In the inspection section, there is a lot of difference between the search and inspection. The inspection is Mr. Madan sir. He would like to enlighten about the inspection in one or 2 minutes. Like, please, inspection is different from the search and seizure. The inspection is in different way in GST Act. Please explain the inspection from with your words, please. Madan sir, please.
Sir, section 67 deals with the inspection.
Sir.
And in that section itself, search and seizure provisions are also there.
Also there.
So, it says that Joint Commissioner or above authorities have the power to authorize INS 01 in favor of his subordinate to carry out the inspection for certain reasons. If he has a reason to believe, if he has some information which he has received from an outside agency or from anybody, from any source, and after taking into consideration that information, if he has a reason to believe that a particular taxable person is trying to evade tax on supplies made by him, or by suppressing his stocks, or he has availed more input tax than he is entitled, or he is trying to play with in complying the law so as to evade the tax. For all these four reasons, as well as if the taxable person is a transporter or a godown keeper or warehouse operator, in that situation, whether the goods which have been kept over there have escaped taxation, as well as whatever accounts and records have been maintained by him, there is a likelihood of tax evasion by that person concerned or by anybody else. In all these circumstances, he can authorize the inspection, and at that place of business, that person can go and make the inspection, check the documents, check the stocks, etc., etc. And if the Joint Commissioner or anybody else finds that during the course of inspection, the person concerned is not cooperating or he is hiding certain documents, etc., etc., then it can be converted into search also by another authorization there and then also. This happens in income tax also. If during the course of survey, the officer finds that search is required, then he can make a authorization even for it is converted into search also. Similarly, here also, both the inspections, of course, inspection is softer than the search. But if the assessee cooperates during the course of inspection, no search is required. But if he does not cooperate and he tries to hide the things and he does not give a correct statement, then it can be converted into the searches also. But the main important thing we members should know that the search and inspection is just like invasion on the rights of the assessee to carry on his business as well as his privacy also. Therefore, the government officers have also to be very careful that each procedure and the provision of the act have to be strictly followed. If it will not be followed, then it will be abuse of power. And for those abuse of powers in GST also, now various courts have given the decision where the assets have been held for more than 6 months and no notice has been issued, where the search is being conducted at a place of the residence of the person concerned, where 3 ladies were present. The inquiry went on for 6 days continuously. Court said, no, this is illegal search, and it has been quashed. So courts are taking very serious view also, because the officers are using as an abuse of power of all these things. So these are my submissions, Srinivas Rao sir.
Thank you, sir.
Inspection is softer than the search.
Thank you very much, rightly said. And I request Sri D.K. Gandhi, please enlighten about the Form 2 and Form 3, wherever the seized material, wherever during the course of the search, and Form 2, Form 3, for the what purposes it is utilized by the department with the SSCs or a dealer or any other mode. Please clarify Form 2 and Form 3. D.K. Gandhi sir, please. Over to D.K. Gandhi sir, panelist.
Thank you, Srinivas sir. You are talking about the procedural part.
Yes.
Form 2 and 3.
That is also very important, sir.
Then give me 2-3 minutes to have by examining these forms. Honestly, I have not gone through this.
Okay.
I have no hesitations.
Madan sir, you can supplement there. You can supplement here, please. Madan sir, are you there? Sir, Madan sir. Unmute yourself, sir.
Hello. Yes, sir.
Madan sir, please supplement.
So sorry, Srinivas sir, on arrest side, I have not prepared myself because it was left to Mr. D.K. Gandhi.
Okay.
I can add only few points relating to attachment of property, assets held more than 6 months, as well as if during the search or survey or inspection, the survey team or inspection team ask for certain check to be given to them towards payment of tax. So some court said if the assessee admits and he gives the check towards tax, there should not be any problem. But Delhi High Court said that during the course of survey or search, no such check can be collected by the team, although even if the assessee admits it, but they are not authorized to collect any payment of tax by way of any check, and such orders were quashed in Delhi at least. In Delhi at least, I am aware of it, but about some other court, I think it has been told to me that in some other court, it was said that if the assessee agrees in his statement that some tax is due, then the team can collect the taxes also. But we understand that tax should not be collected and it is not necessary to give the check at that point of time. Similarly, assets held for more than 6 months without following section 67, read with rule 139, orders have been quashed by Gujarat High Court, where no notice was issued within 6 months. And under section 83, there is a provision for attachment of property or bank account in order to safeguard the interest of the revenue. But this rule has been, this judgment, this has been quashed by Gujarat High Court, saying that 83 can be applied only and only if there is any proceeding pending under section 62, 63, 64, 67, 73 and 74. If no proceeding is pending before any authority, then this section of 83 for attachment of bank account cannot be done, and High Court has quashed such order of attachment.
Thank you, sir. Thank you. But one thing I would like to come to all the members' knowledge and Mr. H.L. Madan sir knowledge. Whenever the stock in trade during the course of the search and seizure or any inspection which have been taken place during the course of these aspects, please enlighten the members, please, in short manner. Stock in trade which have been already going on stock in trade, that should be also enlightened to the members' sake, sir, please. Sir, I'm discussing about the stock in trade. I requested you to stock in trade. Deal with the stock in trade also. Madan sir.
Yes, sir. Sir, please repeat the question again, please, sir.
My question is only wherever the stock in trade is there in the during the course of search and seizure or any inspection under the provisions of GST, what should be happened reason for the stock in trade, please.
What should be?
Happened reason for the
Mr. Srinivas Rao, Mr. Chairman, sir, may I interrupt in between?
Okay.
Sir, as far as stock in trade is concerned, for the purpose of GST, the stock in trade means the closing stock, which is available as per your books of accounts. There is no concept of stock in trade, work in progress or other things. Even the work in progress, everything that is considered under the closing stock. So the head would always be the closing stock. And if the closing stock is counted or physically verified, then if it is short, then appropriate tax will be levied along with interest and penalty. It would be deemed that there is a short stock, whether it is for raw material, manufactured goods or finished goods or traded goods or work in progress or processing material or whatever it is, consumable or whatever it is. So that would be covering the concept.
Yes, sir. Yes, sir.
I may add that we are running short of time and we have to conclude the session.
Right.
So I would request the panelists to give one last comment, 2 minutes, one last comment. I would start with Mr. D.K. Gandhi. One last comment by Mr. D.K. Gandhi.
Yes, sir. The only thing is what I was asked to do, this is seizure of goods can be done if the goods are not found. That is a highness 2. And the same is inspection of goods if you are doing, and then they can give the order of prohibition also in form number GST highness 3 if they are not finding it, that you cannot move the goods. They can prohibit the dealer to just have the custody of the goods when they are conducting a survey and they find that goods are not in the tallying with the books of accounts. That's what I have to submit. Thank you so much.
Thanks, dear. Again, a wonderful, powerful presentation by our Gandhi ji. Gandhi ji is always there in every pocket, in every note, and he is, the currency of India. So we bow down to Gandhi ji. And now, Mr. H.L. Madan sir, I would request him a final comment of 2 minutes on giving his expert advice.
Sir, as you have rightly said, so far as stock in trade is concerned, that stock will be taken, it will be counted, it will be valued, and if there is any difference, then tax will be payable on that. But even on that stock valuation, in DVAT also, in Delhi VAT also, what we were doing, that if during the course of appeal before the tribunal, many times we were requesting the court, the tribunal, and telling them that this stock valuation has not been made proper, because normally the officer concerned tried to do the work in a hurry, and at that point of time they asked the valuation from the assessee only, and assessee by just from his verbal knowledge go on telling instead of looking at the invoices etc. also. Therefore, at the time of appeal also we can counter the valuation part and we can get the additions deleted also. Many times we have done it. And lastly, Pankaj ji, I must say, and I must congratulate you and your team for organizing wonderful National Tax Conference, particularly in presence of Honorable Finance Minister. Thank you so much for giving me the opportunity.
Thank you, sir. But I may add that this is the, the star speakers, the attraction of the star speakers, that even on Saturday morning, we are having more than 500 participants watching you live. And this is apart from the reviewing. 500 participants right now on YouTube, Zoom, Facebook and Twitter live. This is remarkable, and this is the attraction of the chairmen and the powerful star speakers. Mr. Malladi Srinivas Rao, the chairman of this session, last 2-minute comments from you, sir.
Thank you very much, Mr. Pankaj Bhai. I congratulate the Central Zone team for conducting a excellent. There is no words at all, because yesterday the Finance Minister Srimati Nirmala Sitharaman's speech is very, very powerful, and it is very, very necessity to all the practitioners as well as chartered accountants and advocates and other parts of professionals of our AIFTP. And about this today's program, actually the panelists are very, very informative, and this information is applicable to all of us. And thank you very much each and every panelist for patience of their submitting knowledgeable queries and all that. And I thank one and all to Central Zone for giving me this opportunity. Thank you very much. So kind of.
Thank you. So we end this first technical session of day 2 of the National Tax Conference 2020 by AIFTP Central Zone. I am thankful to our chairman, Mr. M. Srinivas Rao, the panelists, Mr. H.L. Madan, Mr. D.K. Gandhi, Mr. Rajesh Mehta, and Mr. Manoj Fadnis, Mr. Anil Mathur, who had contributed in the first technical session. Friends, I would request now the first technical session to be officially over, and we will be starting the second technical session right now. May I submit that the second technical session would be the recent amendments in the TDS and TCS, and the speaker would be Mr. Rajesh Mehta, our own National Vice President and a prolific speaker, and the chairman, none other than Mrs. Premlata Bansal, Senior Advocate from Delhi, our past president of All India Federation of Tax Practitioners. She is a tax wizard, direct tax wizard, we'll say, and she is always there to help us whenever we require any help. Friends, it is a privilege for all of us that she has agreed to be the chairman of this second technical session on the day 2 of the National Tax Conference 2020, which had been inaugurated by the Honorable Finance Minister, Union of India, Mrs. Nirmala Sitharaman. So, not to take much of the time, I would be now requesting our chairman, Mrs. Premlata Bansal, the past president of All India Federation of Tax Practitioners, senior advocate from Delhi, and the first lady president of All India Federation of Tax Practitioners, to please take command of this second technical session. Ma'am, I may add that only Mr. Rajesh Mehta would be covering both the topics. So it is over to you and Mr. Rajesh Mehta, directly to the chairman, Mrs. Premlata Bansal. You have to unmute your mic, ma'am.
Thank you, Pankaj Bhai. Friends, very good morning, this sunny morning. First of all, I want to express my gratitude to National Vice President Shri Rajesh Mehta ji and Shri Pankaj Ghia ji and the organizers for giving me this opportunity to be the chairman of this fifth technical session. Secondly, I want to congratulate the organizers for organizing this wonderful VNTC, which has brought a sense of pride to the Federation. Now we can say that पौधा जो PC जोशी जी, NM रांका जी, पोदार जी, भरत जी, उन लोगों ने लगाया था, our forefathers ने लगाया था, वो अब adult हो गया है. And if the activities of the Federation are carried on in such a pace, with such status, with such character, with such confidence, then the day is not so far where the word of the Federation will be carried some value in the building of nation. With these words, I am coming on the subject. Today's subject given to me is important aspects of TDS and TDS provisions. Friends, there are two ways of recovery of tax with the department. One is the direct from the SSC and second, indirectly. Assessing officer can adopt any of the way out of this. When the tax, interest, penalty, or any other sum is payable in consequence of any order passed by under the Income Tax Act, then the notice under section 156, that is notice of demand, will be issued reflecting the sum payable by the SSC. Section 191 states that income tax shall be payable by the SSC direct unless it is deducted at source or paid by way of advance tax. Chapter 17 deals with the provisions for TDS and TCS in Part B and Part BB, comprising of Section 192 to Section 206. Provisions relating to advance tax are contained in Part C. Those are sections 207 to 219. Payment by the SSC by way of advance tax is a direct method. It is paid by the SSC under the scheme Pay as you earn. Normally, the tax is paid in a subsequent year, that is by way of self-assessment tax, the income which is earned in the preceding year. However, TDS provisions are meant for early recovery of tax. There are various provisions fixing the liability on the deductor who is responsible to make the payment to the deductee at the time of credit to the deductee or at the time of payment to the deductee. The tax has to be deducted at source. There are various provisions under the Income Tax Act, and every year government is widening the scope of TDS and TCS provisions. In the budget 2020 also, many of the provisions are amended and certain provisions are newly inserted. The amended provisions are section 192, 194, 194A, then 194C, 194J, 194K, 194LC, 194LD. Two of the provisions are very important, which are newly inserted. Those are provisions 194N and 194O. Section 194N seeks to deduct the tax at source by the banking companies or post office or the cooperative banking to deduct tax at the rate of 2% on cash withdrawals. I am putting to myself as to whether withdrawal of cash from the bank account of the SSC himself is an income in the hands of SSC. Can it be said that is the income? TDS provisions are meant for deducting tax on income. So whether I am putting to myself as to whether central government has power to legislate on such amount to deduct tax at source, whether that falls within entry 82 of list 1 of schedule 7. Secondly, section 194O deals with provisions, TDS provision to deduct tax at the source of 1% on gross amount of sale proceeds. I am again putting to myself as to whether the entire sale proceeds can be stated, can be treated as income in the hands of purchaser. Because tax on sale purchase of goods fall in entry 54 of list 2 of schedule 7. So whether on this aspect, central government has power to legislate on that. So certain issues are arising out of these provisions. Similarly, scope of section 206, that is 0.1% of TDS from the amount of sale consideration of the purchaser exceeding 50 lakhs and to be deducted by to be collected by the seller having the turnover of 10 crore. The same issue arises. So we have to throw light on this as to whether central government has power to deduct tax at source. There are so many provisions which are newly inserted and amended. I am inviting Mr. Rajesh Mehta to throw some light on this aspect. Over to Rajesh Mehta ji.
Thank you, respected madam. First of all, I am thankful to Sri Pankaj Ghia ji for giving me an opportunity to be here on the issues in TDS and TCS under Income Tax Act. And I am also lucky to have the session chairman as a respected senior advocate, Madam Premlata Bansal, who is our past president of AIFTP also. She is very learned and regularly appearing before Supreme Court and High Court on the tax matters. So I am very lucky. Today I will be dealing with some important issues in TDS and TCS under Income Tax Act.
Mehta ji, your voice is not coming.
So, no, Mr. Sandeep ji, please enable me share screen.
Sir, I think you are enabled, not stopped, no, sir? We all.
Okay, okay. So now my screen is visible?
Yes, sir. Yes, sir.
Okay. So now let us start. There are so many issues in TDS and TCS, but some important issues I will be taking up here. First of all, the TDS on salary. So as usual, we all are aware, no such changes in it there. If the TDS tax liability is nil after allowing all exemptions, even allowing exemption under section 87A and 80C, etc., then there is no liability to deduct the TDS by the employer under section 192. And one important thing under the head salaries. If most of the employers are under confusion many times that whether the TDS on salary is compulsorily required to be deducted equally spread over the whole 12 months, or it can be deducted at the fag end of the financial year. So section 192 subsection 3 allows that any excess or deficiency of TDS under salary can be adjusted at any time during the financial year. So if no TDS has been deducted in earlier months of the financial year, it can be increased and to adjust the exact amount of tax deductible at the fag end of the year. But the employer or employee should not take it as a privilege to deduct at the fag end of the year, because there is a judgment of Ahmedabad Tribunal that if TDS under section 192 is not deducted in equal installments and intentionally it is not deducted and deficiency is made good in last months, then interest under section 201 subsection 1A is liable to be levied. Whereas Honorable Uttarakhand High Court has held that if the assessee if the employer did not deduct the tax from salaries in each month, rather it deducted at the end of the financial year, even though interest under section 201 subsection 1A could not be levied. But however, law does not mention that there should be any intentional default. But we should advise our clients to deduct the TDS in equal installments. If unintentionally there has been any short deduction, it can be adjusted at any time in the financial year. There will not be any levy of interest under section 201 subsection 1A. If the employee has changed his employer, he's changed his job during the same year, then it is at the choice of the employee to report his previous remuneration, previous salaries received from the earlier employer to the subsequent employer. It is not compulsory that the employee should report his previous employer's salary to the subsequent employer, but at his choice, he may submit the information in form number 12B to the subsequent employer, so that the subsequent employer will also take into consideration his earlier salary, so there will not be any short deduction. Otherwise, at the time of filing of the income tax returns, many times employees have to pay interest under section 234B and 234C, because both the employers allows them the basic exemption of rupees 2.5 lakh. And whether the employee is required to compulsorily report his other income other than the salary to his employer, no, it is not compulsory for the employee to report his other income to the employee. But at his choice, he may report his rental income or other income to the employer. But in case of the self-occupied house property, if there is any loss due to interest under section 24, he may report it, and only up to rupees 2 lakh it will be allowed. But if any loss is there due to let out property, then the employer is not allowed to set off that interest arising from let out property. So if there is any interest being paid by the employee out of the rental income, then he will have to claim such interest only in his return of income, not from, out of his salary income through the employer. As we all are aware that the employee can take the deductions under section 80C up to rupees 1.5 lakh, 80CCD rupees 50,000 additional deduction for national pension scheme. Mediclaim. In case of the mediclaim, the employee can claim rupees 25,000 for his family, for himself, his spouse, and his dependent children. So any of the person cannot claim mediclaim if the children are not dependent on him. And if he is a senior citizen, then he may claim ATD up to rupees 50,000. And if any of the employees is also incurring any mediclaim insurance premium for his parents, then he is also allowed rupees 25,000 for the mediclaim insurance premium for his parents. And if his parents are senior citizen, then deduction under section 80D will be allowable for rupees 50,000. And there is one more concession available under 80D, that if no mediclaim insurance premium is paid for the parents, whether the parents are dependent or not, if any of the medical expenditure is incurred for senior citizen by way of the check, it should not be in cash. Other than cash, it should be by way of any mode other than cash, to any hospital, to any doctor, to any, for any medical expenses. Then he will be allowed rupees 50,000. Even if no medical insurance premium is there, medical expenses are also allowed in case of the senior citizen. Either he may claim through the employer by way of under section 192 TDS, or he may claim in his own income tax return. Education loan interest can also be claimed by either in his income tax return or through the employer by way of short deduction, by way of less deduction of TDS. But in case of the education loan interest is allowable only on actual payment basis, not on accrual basis. Whereas in case of the house property income, interest is allowable on accrual basis. But in case of education loan, interest is only allowable and on payment basis. There is no upper limit for education loan interest. 80EE. If any of the employee is paying any interest for the purpose of any acquisition of any house property, then he will be allowed, in addition to deduction under section 24, deduction under 80EE being interest up to maximum of rupees 1.5 lakh. If any of the person who purchases any electric vehicle will also be allowed a interest deduction up to rupees 1.5 lakh for any loan taken to purchase any electrical vehicle. This deduction will be allowed to him under section 80EEB. Now, new relaxation allowed under Finance Act 2020 is if many of the employees are not having any deductions under section 80C, 80D and section 24, then it will be beneficial for them to opt for new provision under section 115 BAC, where the rate of tax are minimum and the employee are given option every year to change this option. If during this year he is not having any exemption deductions available, he may opt 115 BAC, and in the next year he may opt out of this. Salaried employees are given option to change every year. Otherwise, in case of businessmen, they cannot change every year. But in case of if any of the person is opting for 115 BAC, He will not be allowed LTC, HRA, standard deduction of rupees 50,000, professional tax. He will not be allowed interest on loan being taken for self-occupied house property. ATC will not be allowed. ATTTA, ATTB, ATD, etc. will also not be allowed to him. He will not be allowed ATE, ATE, ATEEA, ATEEB, etc. will not be allowed to him. So now comes the new provision during this year, section 194. Dividend has now become taxable in the hands of the recipient. Earlier, companies were deducting, paying dividend distribution tax under section 115. Now that has been abolished, and so now recipient are liable to tax. So any company, domestic company, paying any dividend to any resident shareholder in excess of rupees 5,000 during the whole year, the company will be required to deduct the TDS at the rate of 7.5% during this year. And if any recipient is receiving dividend in excess of rupees 5,000, he may furnish 15G or 15H to the company. But if here he will have to take one point, that if the dividend, interest income and rental income in aggregate received by him from all sources is exceeding rupees 2.5 lakh in case of the non-senior citizen, then he cannot furnish form number 15G. Same in the case of 194A. If any of the person is receiving interest from various banks, from other companies also, he is receiving interest from one bank of rupees 70,000 per year, another bank rupees 1 lakh rupees per year, and he is not a senior citizen. But if the aggregate of interest from all the banks and aggregate of interest, dividend and rental income, even if separately not liable to TDS, separately those interests are not above the limit, but if aggregate of interest, dividend and rental income is 2.5 lakh, he cannot furnish form number 15G to any of the banker, to any of the company paying the dividend, and to any of the person paying rent to him. In case of the senior citizen, if any of the senior citizen is receiving any dividend or rental income or any interest income from any bank, he can furnish form number 15G if his tax liability is nil. So in case of senior citizen, there is no restriction that his aggregate should not exceed 2.5 lakh. Say for example, any of the person has received interest income of rupees 4 lakh from a single bank, but he has invested his amount of interest in tax saving scheme under section 80C. So his taxable income is not exceeding the basic exemption limit, then he may furnish form number 15H because there is no tax liability. There is another important amendment during the financial year 2018-19, that if any of the person is receiving interest up to rupees 40,000, the banks will not be required to deduct the TDS. Earlier, this limit was rupees 10,000. But here we must also keep in mind that any person who is not receiving interest exceeding rupees 40,000 from a bank, he should reflect this interest in his income tax return, even if no TDS is being deducted by the bank. Say, for example, any person is receiving interest of rupees 30,000 from a bank. So if it is, since it is less than rupees 40,000, bank is not deducting TDS on it. And he is receiving another 30,000 from another bank. So again, it is less than 40,000, bank is not deducting TDS. But there is a provision inserted from financial year 2018-19 under section 206AA, as per which the bankers are required to report the interest below TDS limit of rupees 40,000 or 50,000 to by way of filing the form number 200 declaration in 206AA to the income tax department, in which the amounts on which TDS is not deducted because the amount was not liable to tax deduction above the tax deduction limit. So income tax department will come to know the amounts on which TDS was not deducted because it was not exceeding the minimum limit. But if you are receiving interest of rupees 30,000 from one bank, 35,000 from another bank, and this aggregate interest will be reported to the income tax department, and you may receive the notice under section 148, and you may have to face the penalty under section 270 capital A if such interest is not included because it was not getting reflected in the form 26AS of the employee, because or any person, because many of the persons are filing their income tax returns only on the basis of 26AS. So if any amount is not reflected in 26AS, he must himself ensure that other income which is not reported in 26AS is also liable to tax, then he should include it there. If any of the cooperative bank is making any payment of interest to any other cooperative society, then cooperative bank is not required to deduct TDS on payment of interest in which it has been held that cooperative bank are not required to deduct the TDS on payment of interest to other cooperative society. If any of the person is making payment of interest due to delay payment to the trade creditors, then since the payment of interest being paid to the trade creditors is not in the nature of loan taken from that person, therefore it is not covered under section 2 clause 28A. Therefore, as per the judgment of Ahmedabad Tribunal in the case of ITO versus Parag Mansukh Lal Shah, the interest is not liable to TDS if it is made for delay payment of trade liability. So form 26QAA has to be filed. If the filed by the banker, as I have already told that form 26QAA has to be filed by the bankers if interest is not more than rupees 40,000 and on which no TDS is deducted, and this is required under section 194A. 194C, there is no such change during this year, so we will not be discussing it because there are some other important issues in further slides. And one important thing under 194C, that if any of the person is purchasing any goods as per the order given by him as per his specification, say for example, any of the company has given a contract for purchase of fabrication material as per his specification given by the company, and the raw material of the iron or steel is not purchased by the material supplier from the company who has given the order. The material supplier has purchased the goods from open market, not from the person, not from the buyer himself. Then the seller buyer is not required to deduct the TDS. There is a judgment of Honorable Delhi High Court in the case of CIT versus Dabur India Limited, in which it has been held that purchase of printed packing material is a contract of sale and it is not a works contract. Therefore, it is not liable to TDS under 194C. TDS on goods carriage. If we are making payment to any goods carriage directly, then we are not required to deduct the TDS if the person owning the who is the owner of the goods carriage gives a declaration that I own 10 or less goods carriage at any time during the year. Then you are not required to deduct the TDS. If we are making payment to any transport commission agent, not directly to the truck owner, then we should be required to deduct the TDS under 194C if the single payment is exceeding rupees 30,000 or if the aggregate payment is exceeding rupees 1 lakh during the year. In case of 194IA, if we are making payment of rupees 50 lakh or more for the purchase of any immobile property, then the buyer is required to deduct the TDS at the rate of 0.75% on the whole of the amount. If we are purchasing any rural agriculture land, then there is no requirement to deduct the TDS under 194 IA. But if we are purchasing any urban agriculture land, then we are required to deduct the TDS if the total amount is exceeding rupees 50 lakh or more. But there are some judgment, there is of tribunals, there is judgment of Delhi ITAT, there is judgment of Jodhpur ITAT, in which it has been stated that if there are more than one buyer or if there are more than one seller, and each buyer or each seller's per contribution is not exceeding rupees 50 lakh, then there is no requirement to deduct the TDS under 194 IA. But on a safer side, we may advise our client that if the aggregate transaction value is 50 or more, they would deduct the TDS. Otherwise, they may have to face any appellate stage. So we may advise them to deduct the TDS even if per buyer amount is not per seller amount is not exceeding rupees 50 lakh. If any of the rent is being paid by us for any of the residential or commercial premises 50,000 per month, then we are required to deduct TDS under 194 IB at the rate of 3.75%, and such TDS has to be deducted only at the last month of the financial year or only at the last month of the tenancy. Even if individual or HUF is not liable to tax audit, his turnover is not exceeding rupees 1 crore, even a salaried employee paying rent exceeding rupees 50,000 is liable to TDS under 194 IB. If any compulsory acquisition of any immobile property, whether it is a residential property, whether it is an industrial property, if acquisition is done under RFCT LAR Act by the central government or state government or by the central government undertaking or by the state government undertaking, then there is no liability to deduct the TDS, and the such amount received by the recipient will also not be taxable in the hands of the recipient, either under the head of income from other sources or under the head of the capital gain. As per the section 96 of the RFCT LAR Act, any amount received towards compulsory acquisition of immobile property is not liable to tax in the hands of the recipient. If the compulsory acquisition is not under RFCT LAR Act, then TDS is required to be deducted if amount is exceeding rupees 2.5 lakh. 194M. If any of the person is making payment to any works contractor exceeding rupees 50 lakh in one financial year, then he is required to deduct TDS under section 194M at the rate of 3.75%. Say, for example, any salaried employee is getting constructed a residential house for him with material he has given with material contractor, and he has made a payment of rupees 60 lakh during the year to a works contractor, then he is required to deduct TDS at the rate of 3.75% on whole of rupees 60 lakh rupees. 195. TDS on payment to the non-residents. If we are making any payment to the non-residents for any of the goods or services, and if those goods or services have been provided or sold in India and that sum being paid by us is chargeable to tax in India, then we are required to deduct the TDS under section 195. There is no threshold. So, say for example, we have made a payment of interest of rupees 5,000 to any person who is a non-resident, we are required to deduct the TDS under section 195. Or we have received any services from any non-resident person in India, that sum is chargeable to tax in India, then we are required to deduct TDS under 195. Even if the amount is, because there is no threshold, so even from rupee 1, TDS liability comes under 195. If we are making payment to any non-resident under the head salaries within India, then payment of salary to non-resident which is given to a non-resident in India is liable to TDS under section 192 and not under section 195. If we are making payment of any interest, royalty or fees for technical services to any person, even if those royalty, rent are not in case of royalty or professional fees or professional fees for technical services, even if that sum is not chargeable to tax in India, but it will be liable to TDS under section 195 if any payment is being made by any resident Indian to a non-resident person. If, say, for example, any Singapore-based company has provided us fees, technical services, and we are making payment of rupees 1 lakh to that Singapore-based company, that company has provided us services from the Singapore, not that company has no permanent establishment in India. Even though we will be required to deduct the TDS under section 192, this condition is applicable only in the case of interest, royalty and fees for technical services. In other cases, we have to see that that company or that person should have permanent establishment in India and that sum should be chargeable to tax in India. But that condition is not applicable in royalty, interest and FTS. There is one important amendment. If any of the person is making any payment of any, giving any gift to any person who is not related, who is not a relative, say for example, we are making any gift of rupees 10 lakh to a friend who is living in London. He is non-resident. He is not your relative. Then that sum will be deemed to be chargeable to tax in India under section 9, subsection 1, clause Roman 8. And as per section 2, clause 24, Roman 17a, it will be treated, deemed to be some chargeable to tax in the hands of the recipient who is living in London. So we will be liable to deduct TDS under section 195. And if that amount is given on the occasion of marriage of that person who is living in London, then that will not be chargeable to tax because that is also not covered under section 56, subsection 2, clause 10. In case of dividend, royalty and fees for technical services, the rate are already fixed. The rate are every year fixed by the Finance Act. That in case of dividend, TDS will be 20%, royalty 10% and FTS 10%. And in other cases, if the rate is not specified in the Finance Act and there is no lower rate specified in the DTAA agreement, then the TDS will have to be done at the maximum marginal rate. And if the rate of TDS is lower rate is specified in DTAA, then there will not be any liability to deduct the surcharge. If the TDS is being deducted not in accordance with the DTAA and the amount of being paid is not a royalty, not a interest and not an FTS, then the maximum rate of TDS will have to be deducted and that will be further increased by way of education cess and surcharge also. If we are purchasing any immobile property from a non-resident, then we are also liable to deduct TDS under section 195. There is no limit as specified under 194 IA of rupees 50 lakh. We are purchasing any immobile property of rupees 25 lakh from a non-resident. We are required to deduct the TDS on the whole of the amount under section 195. If the seller tells to you that I am purchasing another residential property in India, so I will be getting exemption under section 54 or 54F, then seller or buyer may obtain the lower rate or nil rate certificate from the Income Tax Department. Otherwise, TDS will have to be deducted on the whole of the amount. There is a judgment of Honorable Supreme Court in which it has been held that Income Tax Department cannot hold the assessee in default, cannot deem the buyer deemed assessee in default for the whole of the amount. Only they will deem him to be defaulter only for the taxable portion. But interest under section 201 subsection 1A will be levied on the whole of the amount. Only he will not be deemed to be in default for the whole of the amount. He will be deemed to be in default for TDS for the taxable portion, but interest will be charged on the whole of the amount, default for the whole of the amount. If we are making payment to any non-resident and that sum is not chargeable to tax in India as per the liberalized remittance scheme LRS of the RBI, then the assessee is required. There are, as per Rule 37BB, there are 33 items specified for which sum is not chargeable to tax in India, even if amount is being remitted out of India. For this purpose, we are required to file the form number 15CA, Part A or Part D. Part A is required if the amount is not exceeding rupees 5 lakh. If the amount is exceeding rupees 5 lakh, Part C or Part B is required to be filed. If the amount is exceeding rupees 5 lakh, then we are also required to deduct, file the 15CB from a chartered accountant also. Now, another important sections come 194N, for which respected Madam Premlata Bansal has also discussed that. And yesterday also our Honorable Finance Minister has also discussed on the 194N. So, Madam Premlata Bansal has said that I am liable to TDS on my own amount. I have deposited my amount of rupees 2 crore in my saving account. I am going to withdraw amount of that amount of rupees 2 crore. Bank is deducting TDS at the rate of 2% on my whole amount of rupees 2 crore. This amount of rupees 2 crore was received by me against sale of a agricultural land. That agricultural land, if it is urban agricultural land, it is separately liable to capital gain tax, on which I have already paid the capital gain tax. And I am withdrawing my own money from my own saving account. Or say, for example, any businessman is withdrawing his own money received out of sale proceeds of goods, on which he is already paying advance tax in his regular income tax returns. Even though he is again withdrawing that money, he is liable to TDS under 194N by the bankers. So, Income Tax Department had already made an amendment under Section 198. In 198, they have said that any amount on which TDS is deducted under Section 194N, such amount of withdrawal will not be deemed to be income in the hands of the recipient, but the bank will be liable to deduct TDS. So, since they have made amendment under Section 198, so that sum will not be treated. Otherwise, any amount on which TDS is deducted under any provisions of Chapter 17B, that amount is deemed to be income in the hands of the recipient. But only in the case of 194N. Say, for example, I have withdrawn rupees 2 crore. TDS is deducted under 194N. That amount is being reflected in my 26S. That 2 crore will not be deemed to be my income in view of Section 1 amendment brought out in Section 198. There was one writ petition filed in Kerala High Court, but that was further the assessee did not get favor from the courts, so that TDS is still effective, and scope of 194N is further expanded from 1st July 2020, in which if any of the person has not filed his income tax return for previous 3 years, if he withdraws cash exceeding rupees 20 lakh, bank will be required to deduct TDS at the rate of 2%. And if such person who has not filed the income tax return for 3 continuous years, then if he withdraws sum exceeding rupees 1 crore, TDS will be deducted at the rate of 5%. And in case of other person who has filed income tax return for any of the 3 preceding years, then if he withdraws sum exceeding rupees 1 crore, then TDS will be deducted at the rate of 2% on whole of the withdrawal during the year if amount withdrawal exceeding rupees 1 crore. Say, for example, any person has withdrawn rupees 1.2 crore during the year, then TDS will be deducted at the rate of 2% on whole of the amount of rupees 1.2 crore, that is 2.4 lakh will be deducted under 194N. How the bank will come to know that whether he has filed income tax return for 3 previous year? Income Tax India e-filing website has an option. I am in this screen. It is at the left bottom. There is a window, verification of applicability under 194N. When we click this window, there appear one pop-up. Here the PAN number of the account holder is required to be entered, and the mobile number of the person who has come to the bank for cash withdrawal will be entered. The mobile number of the account holder is not required to be entered here. The PAN number of the account holder is required to be entered, and mobile number of the person who has come to withdrawal, even if he is himself not the account holder. When this is entered here, then one OTP will reach to the person who has come to the bank. That OTP will be entered by the banker. Then the window will show that at the end here, I am in my screen, it is showing that TDS is deductible at the rate of 2%. If cash withdrawal exceeds rupees 1 crore, then the banker may itself assume that that person has filed income tax return for any of the 3 years. TDS on cash withdrawal, it's okay. 15G is not allowed. APMC, if any of the person is making cash withdrawal for purchase of agriculture produce, and that person is registered as a license, is having a license of APMC, or he is a commission agent registered under APMC, then he may give a declaration to the banker. Then banker will not deduct TDS under 194N. Then 194O is introduced during this year, which is applicable from 1st October 2020. Our respected chairman, madam, has also told to discuss this. This is because this is a newly inserted provision. And here again, the TDS is required to be deducted on the whole of the amount. Whereas the whole of the sale amount is never taxable, because only the gross profit or only the net profit is chargeable to tax in the hands of the seller. But here the buyer is required to deduct the TDS on the whole of the amount if the aggregate amount is exceeding rupees 5 lakh in case of the individual or HUF, or in other cases the whole of the amount, even if it is less than rupees 5 lakh, it is liable to TDS under 194O in case of the e-commerce transactions. If TDS is not deducted, then 30% amount, as we all know that it is disallowed under 40A Roman 1A. We always say it 40A IA. It is not 40A IA, it is 40A Roman 1A. So 30% amount will be disallowed. And if the recipient has filed his income tax return, then 30% amount will not be disallowed. But the person who is liable to deduct TDS will be liable to pay interest under section 201 subsection 1A up to the date of filing of income tax return by the recipient. If the recipient has filed income tax return after the due date of filing of income tax return of the payer, then such sum will be disallowed in the current year and will be allowed in the subsequent year. So Form 26A is not a way out. The person making the payment is first liable to TDS, otherwise he may be liable to disallowance also, and liable to penalty under 271C and liable to interest under 201(1)(a). Now we come to the TCS provision, because we are running short of time. So I will be discussing the important issues of TDS, other issues of TCS, because the important amendment during this year is the TCS on sale of the goods and TCS on LRS. If any amount being remitted out of India towards any education loan or any amount under LRS, if that amount is exceeding rupees 7 lakh, then TDS at the rate of 5% is required to be deducted under 206C1G on the amount exceeding rupees 7 lakh. Say for example, any person is remitting rupees 10 lakh out of India for the medical treatment of his relative. Then bank remitting the money out of India will be liable to deduct TDS at the rate of 5% on 3 lakh rupees only. So TDS of rupees 15 lakh, TCS of rupees 15 lakh will be collected by the banker under section 206C(1)(g). If any amount of being given by us to any tour operator for foreign tour, then such tour operator will be liable to collect TCS under section 206C(1)(g) on the whole of the amount at the rate of 5%. Say for example, we are giving a payment of rupees 50,000 to a tour operator. He may be either an individual or a HUF or a company, and he may be an individual whose turnover is not exceeding rupees 1 crore. His turnover may be a rupees 10 lakh. That tour operator is a very newly established tour operator. If we are making payment, say for example, of rupees 50,000 for my Dubai tour, then he will be compulsorily required to collect TCS at the rate of 5%, that is rupees 2,500 on the whole of the amount, including the air ticket charges. Because he has made either my hotel stay arrangement at there or lodging or boarding arrangement at there. If I have purchased only the air ticket from a tour operator and I have not got any arrangement for hotel stay, not any local conveyance, not lodging boarding, then that tour operator is not required to collect TCS. If my tour package includes stay, lodging and boarding in addition to air ticket, then the TCS will be collected on the whole of the amount. Now, another important TCS on sale of goods on the payment received in excess of rupees 50 lakh. This section was expected to be applicable from 1st April 2020. But when the Finance Act passed, the date was extended to be effective from 1st October 2020. So if any of the seller whose sales during the preceding financial year is exceeding rupees 10 crore, he receives any amount from any person towards sale of goods, then he is liable to collect TCS at the rate of 0.1%, which is currently 0.075% if the amount exceeds rupees 50 lakh. And TCS will be collected only on the excess amount. On the first 50 lakh, TCS is not required to be collected. Earlier, when the provision was introduced in the Act, there was the provision in the section 206C(1)(h) that TCS is required to be collected in respect of amount received against sale of goods. The sale of goods is during one financial year if it exceeds rupees 50 lakh. Now, by way of introducing CBDT circular dated 29th September, CBDT has changed the concept, and CBDT has only told that you are to keep in mind only the amount received during the one financial year. You are not required to match the amount of received by you during the year with the amount of sales. So you are not required to do one-to-one matching of the amount received with the tax invoice being sold by you. So they have CBDT has told that for doing the ease of compliance, we have done away with the linking of the sale with the receipt, linking of the receipt with the sale. So now there is only provision, because earlier, if the CBDT circular would not have come, then we would, at the time of every receipt, first of all, we would have to match that for which sale, for which tax invoice we are receiving this payment. And when we are receiving, say for example, in the October 2020, we have received an amount of rupees 60 lakh. Then, first of all, we will have to see that this 60 lakh was sold by us when? In which year? We find that we sold the goods of rupees 60 lakh in financial year 2017-18. Then, we will have to see the sale of rupees financial year 2016-17. Whether the sale during the financial year 2016-17 was exceeding rupees 10 crore or not. If the sale during financial year 2016-17 was not exceeding rupees 10 crore, then we are not liable to collect TCS on rupees 60 lakh being received by us in October 2020. So now they have done away with. So they have told that no, you are not required to match every receipt with the sale of goods, with tax invoice. You are only to see that the year in which amount is being received by you is exceeding rupees 50 lakh. Then in the preceding financial year, in the year of receipt, if the sale is exceeding rupees 10 crore, then you are required to collect TCS if the aggregate amount is exceeding rupees 50 lakh. And CBDT had already made some introduction of section 261I and 1J. In that, they had told that we may issue guidelines. So CBDT has come out with a circular number 17/2020 in the form of a guideline. So guidelines are always binding to the income tax authority as well as to the assessee also. CBDT circular are always binding only on the income tax authority, not on the assessee. So they have told it as a guideline. This is not only the CBDT circular, this is guideline. So we are binding by this guideline. So guideline has changed the actual content of the Income Tax Act contained in section 261H. So during this year, if I have received rupees 60 lakh in the month of October 2020, and I have already received rupees 75 lakh between April 20 to April 20 to 30th September 2020. I am not required to collect any amount of rupees 75 lakh which has been received by me between April 20 to 30th September 2020. But I am required to collect TCS on the whole of the rupees 60 lakh because my limit of 50 lakh has already crossed up to 30th September. And say, for example, I have received rupees 40 lakh only up to 30th September, and I have received rupees 20 lakh in the month of October 2020. Then I am required to collect TCS on only rupees 10 lakh at the rate of 0.075%, that is rupees 750 is to be collected only on rupees 10 lakh, even if I have received rupees 20 lakh in the month of October 2020. And for the purpose of determining the limit of rupees 10 crore, whether GST is to be included? No, GST is not to be included for the purpose of determining the limit of rupees 10 crore, because as per the regularly adopted accounting practice, the businessmen or industrialists are separately showing the GST collected by them as a liability or as an asset in their books of accounts. They are only accounting for the excluding value in their trading account or in their manufacturing accounts. So for the purpose of determining the limit of rupees 10 crore, GST is not to be considered as per section 145A of the Income Tax Act, and as per the guidance note issued by the CA Institute, the GST or any duty or cess or any indirect taxes has to be included for the purpose of computation of income, not for the purpose of maintaining of books of accounts. So section 145A is not binding here under section 206C1H to determine the limit of rupees 10 crore. But in the case of determining the limit of rupees 50 lakh, GST has to be considered, and the amount of rupees 50 lakh will comprise only of the sale against goods. Many of the buyers are obtaining services from us also and buying goods from us also. But for the purpose of 206C1H, now we should be required to maintain two separate accounts. If we are receiving any amounts towards providing of services, we are not required to collect the TCS, because TCS is required to be collected on against the amount received by us against sale of goods in any year. But TCS is not required to be collected against sale of services if we are maintaining two separate accounts of the buyer in our books of accounts. Here one example again I am taking that, say for example we have sold goods of rupees 2 crore in October 2020 and we have received this amount in April 2021. And since the amount being received in April 2021 is exceeding rupees 50 lakh. So whether we are required to collect the TCS in April, because the goods was sold in October 2020 and sale of that seller was exceeding rupees 10 crore in the preceding financial year. That is, in the financial year 2019-20, sale was rupees 12 crore. So we have sold rupees 2 crores during this October 2020, but we have not received any amount in this current financial year. We have received amount of rupees 2 crore in the subsequent financial year in April 2020. So any amount if received in subsequent financial year, first of all, we will have to see that if amount is exceeding rupees 50 lakh, we are required to collect TCS under 260C1H. Then again, we have to see second condition compulsorily, whether the sale in the preceding financial year in which the amount is received is exceeding rupees 10 crore or not. So if the sale in financial year 2020-21 is only rupees 9 crore, then we are not required to collect any TCS even if amount being received by us is exceeding rupees 50 lakh in April 2021. Because the amount, you are not required to see the turnover in which the year, turnover of the year in which the sale was, turnover of the preceding year in which the sale was made. You are required to see the turnover of the preceding year in which the amount is being received by you. So if your sale in financial year 2020-21 is rupees 9 crore only, you will not be required to collect any TCS in subsequent financial year in 2021-22. And many of the persons are saying that we will collect TCS in tax invoice itself. This is, in my opinion, this is not in accordance with the concept of the law. The law tells you to collect TCS only at the time of receipt of the consideration. This, in my opinion, this section was introduced only to find out that when any goods is being sold by a person, whether he is receiving the amount or not. Because many times in the case of GST, we have seen various cases of fake invoices. 200 crore, 500 crore, 100 crore fake invoice racket have been detected by GST department across the India. So in my opinion, this section has been introduced to track the fake invoices. Therefore, they have made it compulsory to collect TCS only at the time of receipt of amount and not at the time of sale of goods. And they have kept it this amount too low. Many of the persons are saying that if I am selling goods of rupees 1 lakh, I am required to pay only rupees 75 rupees. So I will pay it out of my own pocket by way of collecting in the tax invoice itself. No, but this is not in accordance with the law. Law is not, law does not want to see that you are paying 75 rupees out of your own pocket or not. Law will deem to you in assessee in default if you are not collecting any amount at the time of receipt. Even if you have collected the amount in tax invoice, you have paid out of your own pocket, even though you will be deemed to be in default. So you may mention, in this slide, I have mentioned a sample note in which you may mention, we are liable to collect TCS on receipt above 50 lakh. So whenever you mention this note, we are liable to collect TCS, it means it assumes that your sale in the preceding financial year is exceeding rupees 10 lakh and 10 crore. And if any amount is received during the current financial year, then you are liable to collect TCS. And if you received any amount in subsequent financial year, then you may not be liable to collect TCS under 206C. So
Rajesh bhai.
Rajesh bhai.
Yes, sir.
Rajesh bhai, time
in
is
3-4 minutes.
Yes, sir. So now my everything is also going to complete. In case of TCS, we are required to deposit the TCS within 7 days from the end of the month every time. And in case of TDS, we are always allowed the time of 7 days. But if any TDS is deducted in month of March, we are allowed time of 30 days. But in case of TCS, we are only allowed time of 7 days, even in the month of March. So the important discussion on TCS I have already done, and So now I hand over the mic to our session chairman, respected Madam Premlata Bansal.
Rajesh bhai, it's a wonderful deliberation for the benefit of all the persons who have gathered here. In greater detail, you have explained all the provisions. But I am also doing my duty, so I will point out something in it.
Yes.
The first thing what I want to say, that in the case of salary, under section 192, it says that at the time of payment, tax has to be deducted at source. Other TDS provisions are saying that at the time of credit or at the time of payment, whichever is earlier. Only the salary provision is that which says that at the time of payment, you have to deduct tax at source. If say that I am crediting the salary on 31st March, I am not paying to the employee. So employee will pay the tax on salary in his return of income. Say that in the month of April or May, he is paying the tax by way of self-assessment tax. So whether employer is liable to pay any tax thereon, to my mind, no. But he will be liable under section 201. That is what I am thinking, that under 201 for short payment or no deduction of tax, he will be liable for interest. But that is only up to the date when the employee is paying the tax. That is Adidas Marketing Delhi High Court have held so, that only to that extent and to that date. That is one point. Secondly, under 194N, that is the TDS on bank withdrawals, withdrawals of amount. So whether tax deducted at source is an income in the hands of SSC, that is what section 198 says. But second proviso to section 198 says that no, that is not the income in the hands of SSC. Otherwise, normally it would have been treated as income in the hands of SSC. But similar provision is not with respect to 194O. When this e-commerce operator is deducting tax at source from the amount of e-commerce participant, then whether that TDS is to be treated as income in the hands of e-commerce participant, section 198 is silent on this. So sale consideration is not the income in the hands of, that is the gross receipts. And therefore, to my mind, that is not to be treated as income in the hands of e-commerce parties. And these three issues. One thing in 192, there is some relaxation in respect of ESOP, Employee Stock Option Plan. Earlier, it was at the time of issuing ESOP. Existing law was saying that tax has to be deducted at the time of exercise. And secondly, twice tax was to be paid at the time of exercising the option, and secondly, at the time of selling by the employee by way of capital gain tax. But now the relaxation is made by CBDT, saying that if startups which are eligible for ATIAC, which has high potential of employment for those SSs, if they provide ESOP, then tax has to be deducted at source within 14 days after the expiry of 48 months. After 4 years from the end of the relevant assessment year, or from the date of sale of such ESOP by the employee, or at the time of retirement. Retirement or employee ceases to be the SSC, ceases to be the employee. So this is the great relaxation given by the department. Similarly, 194J, fee for technical services, now it has made only 2% because greater dispute between the SSC and the department. Because SSC was showing that the receipt falls under section 194C, whereas department was saying that is fee for technical services and therefore 10% TDS has to be deducted. Now that controversy has been set at rest, and fee for technical services are amenable to only 2% of TDS. And 194K, that from units of any income on units of mutual fund or units of administrator of the specified undertaking or specified company, then tax has to be deducted. Otherwise, Rajesh, you have done a greater job, and thank you so much. Now over to Pankaj. I am
Thank
not
you.
taking much time, Pankaj. Within time, we have concluded the session.
Ma'am, that is the benefit of the AIFTP.
Yes.
We professionals have to maintain the time management. If we professionals do not maintain the time management, nobody can do it. So
Yes.
that is the motto of AIFTP also, and we adhere to the time. Friends, so with the second technical session coming to an end on the day 2 of the National Tax Conference 2020 by AIFTP Central Zone, it is time to say goodbye. But before goodbye, we want to have acknowledgements for the 2-day conference and some comments. Already some senior members are here. And again, I would start with Mr. D.K. Gandhi to give his comments in brief in 2 minutes for the 2-day National Tax Conference 2020 inaugurated by Union Finance Minister. You have to unmute your mic, Gandhi sir.
Yes. Thanks a lot, Pankaj Bhai. It was such a memorable national conference has taken place because we have been able to get the privilege of hearing our finance minister, and she has been so motivating and so well recognized the work of the federation as well as member. That was really wonderful, and all credit goes to both of you. You have taken the lead, you have taken the federation to a very new heights, and we are hoping with the same zeal we shall be moving forward, and that in time to come we shall be having Prime Minister also in our conferences. That is my wish and the hope. With all the support of each and everyone in the federation, we shall be able to achieve that also. Congratulations to you, Pankaj Bhai. Congratulations to Sanjay ji, Rajesh ji, Sandeep ji, Manoj ji. Thanks a lot. Thanks a lot. Well done.
Thank you. And I would say amen to D.K. Gandhi's wish. Yes, we will target for the Prime Minister, Honorable Mr. Narendra Modi, to be on the platform of AIFTP. Friends, today also at this point we have 500 plus delegates viewing us live on Zoom, YouTube and Facebook and Twitter. And this is the power of AIFTP and power of AIFTP Central Zone. Friends, I would say the Finance Ministry for the first time has recognized AIFTP.
Yes.
And Finance Minister presence on the AIFTP platform gives us a great boost to interact with the Finance Ministry on the direct and indirect tax issues of the tax professional. And our representation would now henceforth would be considered in a different perspective.
Very correct.
We have now Mrs. Premlata Bansal, our past president, senior advocate, and our guide, philosopher, everything. I would request her for her brief comment.
Pankaj Bhai, at the initial stage, I have given you the congratulations, a big congratulations to Rajesh Bhai and Pankaj Bhai. At which pace you are doing the work, you have set an example, I must say. And all the zones should follow you.
Yes.
That is the great comments for you.
Yes.
And at such pace you are working, you have brought the feather in the cap of AIFTP.
Yes.
And also this is the feather in the cap of Nikita Madam, who is the national president this year. Despite of this corona pandemic, AIFTP has done so much work that in none of the year such work has been done. And I must say that MS Rao sir will also do work in this greater pace. That is what my wish. And I also wish that Honorable Prime Minister and Honorable President should also come on the platform of AIFTP, so that we can greatly, with great honor, we can say that AIFTP is the organization which carries weight, which carry the value in its word. And with this wishes, once again, congratulations to Pankaj Bhai and Rajesh.
Thank you, ma'am. Thank you. Your blessings are always with us. Your good wishes are always with us, and we cherish those blessings and good wishes. Now, Mr. Maladi Srinivas Rao, our Deputy President, the incoming National President, and We wanted to go not virtually to Hyderabad. We wanted to go physically to Hyderabad.
Yes.
God willing, what would happen, we don't know. But yes, let us hear Mr. Srinivas Rao in first 2 minutes.
Thank you, sir. Thank you, Pankaj sir. This is a great opportunity to the AIFTP. Madam Nirmala Sitharaman, the Union Finance Minister, has already given a good consent to the AIFTP Central Zone, and as well as she has dealt with yesterday's speech. That was very much memorable to each and every one of the federation. First of all, I congratulate all the team wherever led by Mr. Pankaj Gia and Rajesh Mehta, Vinay Jolly ji, and Sandeep Agarwal, and all the team members of the Central Zone is a vibrant zone. I have named as a vibrant zone. Why? Because the webinars are excellently conducted in the past pandemic last 5 to 6 months. The credit goes to only the Central Zone, because all zones, out of all zones, 5 zones, the Central Zone has done a very excellent and good job. This job may not be followed by other zones also. I congratulate once again all the team members of Central Zone, and especially the rail engine are the key of the zone, Mr. Pankaj Gia, who has taken a lot of pains for this webinars and as well as this National Tax Conference. Is a great success and grand success. There is no words to say like this. That's why I firmly in my mind and in my record that the Central Zone will be the vibrant zone. That is the first and foremost thing. Secondly, the 2-day sessions, yesterday and today also, the number of participants also continually goes with 500 in all the areas. Why? Because the people are very much interested in the subjects. The chosen subjects are very much interested and very much useful to the day-to-day practice, each and every practitioner all over the country. I thank to the organizers for giving me this opportunity. Thank you, one and all.
Thank you, Mr. Srinivas Rao. 2021 would again be a remarkable year for the Federation. He is a man who is blessed by Lord Tirupati, and he will take the Federation to new heights. We are confident of it.
I will try my level best, sir, with all your support,
Sir, I would now request our National Vice President, Mr. Rajesh Mehta, for his concluding remarks.
Thank you, Pankaj ji. First of all, I am thankful to our national team of AIFTP and I am thankful to all the zone of AIFTP and our Central Zone team, and last but not the least, our respected Pankaj Ghia ji, who has done a commendable job by way of getting done this grand national tax conference. If I speak for 1 hour about good qualities of Pankaj Ghia ji, it will be too short for me. But due to lack of time, I am saying that he is an excellent person. Only under his able leadership, we could organize this grand national tax conference, and Honorable Finance Minister could come with his great blessings to us and with his great energy and great planning. So I am thankful to all and thankful to Pankaj ji and everyone.
Thank you. Friends, I would add what Mr. Rajesh Mehta said. It is not me, it is not one person, it is a team of Central Zone. And the credit goes to the office bearers, the National Vice President, Mr. Rajesh Mehta, the Chairman Central Zone, Mr. Vinay Jolly, the Secretary Central Zone, Mr. Sandeep Agarwal. They are the person who had been working day and night and all the executive members, all the participants. They are the workers who had been participating. And our national team, what Madam Premlata Bansal has said is absolutely correct. It is a united achievement of All India Federation of Tax Practitioners, and credit goes to each and every member and participant. Yes. The father figures who had built this association, Mr. P.C. Joshi, Mr. N.M. Ranka, Mr. Poddar, and Bharatji Agarwal and all, who had built this association, all the past presidents of the AIFTP, who had put in their hard words, who had toiled day and night for making AIFTP a great association federation representing all over India by advocates, chartered accountants, and tax practitioners. We are proud that we are 9,000 plus members. We are proud that in each and every district there is one AIFTP member. We are proud that AIFTP members have achieved the distinction of being the judges of the High Court, achieved the distinction of being the judges of the members of the Income Tax Appellate Tribunal, the Commercial Tax Tribunal, and they had excelled in each and every field of life. Now I would request Mr. Vinay Jolly, the Chairman Central Zone, for his concluding remarks. Very short.
Thank you,
पंकज जी जॉली साहब से पहले एक बात कहना चाहती हूँ कि हम थैंक्स करते हैं सारी ऑडियंस का. थैंक्स टू ईच एंड एवरी मेंबर जिसकी वजह से आपकी कॉन्फ्रेंस सक्सेसफुल हुई.
Yes, ma'am.
Had there been no audience, then we could not have done anything. So above all, the members are most valuable members.
Yes,
and thanks to them.
Yes, ma'am. Agreed.
जैसा कि मैडम ने कहा, सबसे पहले तो मैं पूरी पार्टिसिपेंट्स का धन्यवाद करना चाहूँगा जिन्होंने हमें उत्साहित किया और ये हम कॉन्फ्रेंस सक्सेसफुली कर सके. उनके बिना ये कॉन्फ्रेंस सक्सेस नहीं होती. मैडम के वचन बिल्कुल कहना उनका बिल्कुल सही है. और अब मैं सबसे जो हमारे एडवाइजर हैं, जो हमारी इस टीम की जान है, हार्ट है, दिमाग है, वो पंकज भाई, उनका मैं बहुत बहुत धन्यवाद करता हूँ. और उसके बाद में राजेश मेहता जी जिन्होंने पूरा हमारा साथ दिया, हमें गाइड किया, उनका भी धन्यवाद. और मेरी पूरी टीम संदीप के साथ में पूरे एग्जीक्यूटिव मेंबर्स का मैं धन्यवाद करना चाहूँगा जिन्होंने हमें पूरा सहयोग दिया. डे और नाइट लग करके उन्होंने वर्क किया जिसकी वजह से आज हम इस मुकाम पर पहुंचे. मैं सभी पैनलिस्ट, सभी स्पीकर्स, सभी चेयरमैन का भी धन्यवाद करना चाहूँगा जिन्होंने हमें पूरा सहयोग दिया. धन्यवाद. Over to Pankaj ji.
Thank you, Vinay bhai. And lastly, Mr. Sandeep Agarwal, the young, vibrant secretary of the AIFTP Central Zone.
Thank you, Pankaj ji bhai sahab. Thank you so much. As Madam Premlata Bansal said that you are our engine. Without your power and push, we can't go further. हम आगे नहीं चल सकते. आप ही के पीछे चल रहे हैं. जॉली जी ने भी कहा कि आप ही का माइंड एंड हार्ट दोनों आपके काम जिससे हम आगे तक पुश हो रहे हैं. मैं थैंक्स करना चाहूंगा सभी चेयरमैन्स का. आई एम थैंकफुल टू ऑल चेयरमैन्स, आवर डिप्टी प्रेसिडेंट मालाडी श्रीनिवास सर, प्रेमलता बंसल मैम, राजेश मेहता सर, हु इज आई एम सीइंग हिज एनर्जी इज मोर देन मी. मतलब ही इज सो एनर्जेटिक पर्सन. वी कैन सी हिम फ्रॉम लास्ट 2 days. ही इज स्टिल देयर एंड हिज वीडियोज नेवर ऑफ. सो उनकी एनर्जी. मेरे चेयरमैन जॉली सर, आई एम थैंकफुल टू यू ऑल. आई एम थैंकफुल टू ऑडियंस who are regularly joining us from last 9 months, and they are behind this successful NTC. This I am thankful to you all. I am thankful to Gandhi sir. Thank you so much.
So friends, this is the moment. As already guided by our past president, Ms. Premlata Bansal, the audience, we bow down to you, your participation, your appreciation, and we would expect your comments. Send us a mail, send us a comment on the WhatsApp. You have my number, you have Mr. Mehta's number, you have Vinay Jolly's number. Send us appreciation on whatever mistake we had committed. See, we always say to you, to err is human. And we bow down, we ask your forgiveness for any mistake, anything which we could not have foreseen. Deliberately, we do not want to do anything wrong. But sometimes, in the heat of the moment, sometimes some things happen and we bow down. We ask your forgiveness for it on behalf of all team of AIFTP, all members of AIFTP and Central Zone. And we see the next 2 presidents sitting here. I would simply say next 2 presidents are here. One is already declared, one should be declared very shortly. And therefore, I would be saying that these are the future. I would request you all to be joined. If you had not joined AIFTP, be a part of this federation. Join the federation. Contribute as a tax professional to the federation and to the nation. The motto of AIFTP, Triple E, education, ethics and excellence. They are the motto, and that motto has to be followed. With these words, we have the vibrant team of the Central Zone ask you to be with us whenever we organize any program. It would be communicated to you through all social media platforms. Do join us. We try to get the best. We try to get the best speakers. We try to get the best chairmen, and we try to give you the best education material as far as we can do. So with these words, thank you for being the part of the National Tax Conference 2020. We thank you all. Thank you and bye-bye. Have a good weekend. Have a good Deepavali. We wish you happy Deepavali on behalf of All India Federation of Tax Practitioners. No firecrackers, but have a firecracker in your heart.
Yes.
Have a fire in your heart. Enjoy the Deepavali. Thank you.
Thank you.
With this, I would be ending the meeting. Last word, bye-bye from all of us.
Bye-bye.
Thank you. Bye-bye.
Thank you.